Hello everyone, and you're watching Bitcoin Bubble news channel. We'll talk about the results soon. Since 2008, we've been debasing the currency, which is the same thing as making the system bankrupt for everyone. You mean making everyone else's problem when you say mutualizing, right? Yes, that is, economic action is what makes the interest pay off, right? If you don't have a job, you can't pay your bills or mortgage, right? True. And if your debt keeps growing, you need to keep making more money to pay it off. Now look at the GDP side of things. People say that globalization is a big reason why the wealth gap is getting bigger. Companies sent industrial jobs to countries with cheaper labor through labor arbitrage. This cut down on production costs and increased profits for asset owners. While these owners or shareholders did well, the middle class people who used to work in those companies lost their jobs. In an interview with Tom Bilyeu, Raoul talks about this subject. He talks about how debt goes up and down and how it can cause financial chaos. He focuses on the effects of the 2008 financial crisis. The crisis showed how weak the global financial system was because people and governments were relying more and more on debt to make up for real wages that were staying the same. As a result of this change, more people are turning to drugs when they are having trouble with money or feeling hopeless. Raoul stresses that we need to fix this economic inequality and the social problems it causes before we can work on bigger systemic changes. You can learn more about what Raoul said to Tom Billiard by watching clips from the interview. We'll talk about the results soon. Since 2008, we've been debasing the currency, which is the same thing as making the system bankrupt for everyone. You mean making everyone else's problem when you say mutualizing, right? Yes, you can either raise taxes, which is what they're also trying to do, or you can make money through a process called quantitative easing. This debases the currency, which means that when they do it, asset prices seem to go up. They do not really rise. When you look at the central bank's balance sheet and divide all of its assets by it, you change the denominator, which is usually as dollars. But when you use the balance sheet, you can say, okay, this is the purchasing power of dollars. How many dollars are in the economy or have been printed in excess? You'll see that the SP 500 and real estate gold have both stayed the same. And crypto and technology are the only two investments that have actually done better once the Fed began monetizing, or making the denominator less important. It's a 2% growth rate. That's what the government needs to pay its 2% interest. How does that help pay the interest? Because they're just taking in more tax money, that's pretty much it. Right on, right? In order to pay the interest, the economy needs to grow to a certain point. But if everyone's interest payments are too high, the interest rate should be as low as possible. This is why the Japanese have a much lower natural rate of interest than everyone else. They owe 260% of their GDP. But their businesses have less debt. In other words, they're stuck. They can't let the interest rate go up because they owe so much money. No one can. We're going to have a slump and cut interest rates back to zero because of this. It can't work, it doesn't. When all of these governments reach 100%, one of four sectors will either blow up: the private sector, the business sector, the corporate sector, or the government sector. Because GDP growth keeps going down, there isn't enough money coming in to pay off that much debt. That is, economic action is what makes the interest pay off. Because you don't have a job, you can't pay your bills or debt. Very true. And if your debt keeps growing, you need to keep making more money to pay it off. Now look at the GDP side of things. On the other hand, we see that all government debt that is higher than GDP shows up on the balance sheet 3.5 years later. I did the maths on this too. I believe I was the first person to really understand this. I checked this out. After 3.5 years, I realized that they were making money off of the interest payments on the loan. Okay, but why 3.5 years? In 2008, there were no interest rates at all. Each and every government should refinance itself at zero, and most of the debt that all countries have is between 3 and 5 years. That's 3 to 5 years or 3.5 to 4 years. That's because you have to bring down the interest rates every time you pay off the loan. There is a decline in the end though. The thing you get is this very repetitive thing. Because are they putting off having to pay for 3 to 5 years? No one pays back loans. Nobody is ever going to pay back a loan. That's why the next amount of debt always ends up on the Fed balance sheet when it's time to pay it off. Actually, it does happen because of the debt-driven slowdown in the economy. But it does. There is also a small change in size. The US, the UK, the EU, and Japan are all the same in this way. The difference between the balance sheets is even bigger. The only difference is that they have to put direct money in whenever there is a direct financial problem. That's something we've already seen a little of in the US. Raoul thinks that since the financial crisis of 2008, the world economy has been essentially spreading the load of its insolvency by debasing currencies and making banks insolvent. He says that the two main things governments do are raise taxes and print more money through quantitative easing, which makes the currency less valuable. Even though this makes the prices of things like stocks and real estate look like they're going up, their real value hasn't gone up when inflation is taken into account. This is especially bad for younger people. It's harder for millennials to afford assets like homes since they started working after the Federal Reserve started this practice. This is making the wealth gap between those who own assets and those who don't grow. Raoul talks about how the government needs the economy to grow in order to pay the interest on their debt. And the government gets more tax money to pay its debts in interest. But as debt and interest payments go up, it becomes very important to keep interest rates low. When governments reach 100% debt to GDP, they could hurt the private sector, the banking sector, or their own economies because growth slows and can't keep up with rising debt levels. This is why a lot of experts think the economy will have more problems. Let's watch more clips from the interview that are related to this topic. In reality, the Fed balance sheet is what's moving the SP 500. That means it's a trick of the eye. It's a money trick. So the price just goes up to keep up with the inflation that making money causes. That's right. The price is being changed again. That's what's going on. And once you know that, and it's 97%, you know that this liquidity is the only thing that counts, which is what I've been telling people. We're sorry, but all of your business models are wrong. Even though you have to guess the business cycle to know where you stand in the printing money cycle, that's all that counts and what drives assets. Why are people so mad right now? The stock market is going up and they think, don't you know there's a recession? I am aware that more money being printed is the best way to fight decline. Liquidity is driven by what I know. The business cycle is what makes it happen. There are also cycles that make you look ahead. The Chinese credit cycle is about 18 months or 2 years ahead of the rest of the world. It's called the business cycle and it shows how the economy goes up and down. That's a boom and bust or an expansion of the decline. And one thing that central banks usually do is raise interest rates when the economy is doing too well and prices are going up. In general, that slows down the economy. Interest rates would go up on their own even if there wasn't a central bank. I believe that the free market can set interest rates without a central bank. The business then slows down again, and this keeps happening over and over again. The Nasdaq could go up by more than twice as much from here on out. We're about to see another huge crypto run that will last until 2025. That's why we're seeing big moves that are caused by the debasement. And I went over it in the Everything Code article I wrote for Global Macro Investors. That's my top level study. Service in that I've found different ways to show all of this.